Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Hello, welcome back to the Massive Passive Cash Flow podcast. This is Gary Wilson, your host. We're glad to have you on board again. Hey, if you haven't done so and you wouldn't mind, when you get a moment, please go ahead and subscribe to the podcast. So it's on all your favorite channels, Stitcher, iTunes, iHeartRadio, Apple, all the above. And while you're there online, go ahead and check out the new website, globalinvestoragent.com. So these are all the real estate agents that we've trained to work with us. So they're not your average, everyday, typical agent. These guys are prepared, they know how to identify, analyze, and negotiate on and off market deals for you and I. And they have all the tools we need, which is pretty cool. So you get to rely on them to do the heavy lifting, and you don't have to pay them. They get paid from whoever is selling the property. They do the heavy lifting for you. So they, by the way, have access to every single parcel in the country. I don't care if it's commercial, residential, doesn't matter. They got all the information, ownership information, property information, everything you could possibly imagine. So in any case, let's go and get started here. We got a great guest today, Marcin Drozdz from the coast of Florida, not too far from where I am. And Marcin, great to have you on board, man. I appreciate you taking your time to do this,
Yeah, no, thanks, Gary. Thanks for having me. Great name for the podcast, by the way, Massive Passive Cash Flow. That I like it. That works.
Yeah. Well, we're all about having, multiple streams of income, not hundreds, although I know people that do that, and I used to do that too. But really, if you have three core strategies, all focus on the same, genre, if you will. In my case, it's real estate. You can do quite well, but it doesn't all have to be the same thing. You can generate passive income from REITs and syndications and things like that, and you can generate active the government calls it passive, but it's anything but passive. It's rental income from rentals, short-term, long-term, corporate housing. We do all that. And if you're like me, create a second business related to the first business and leverage that as well. And the fact is, you're doing one, you have engaged in one set of activities that pays you multiple ways. That's really one of the keys. And Marcin, like I do, when you operate that way in real estate has market cycles like any commodity. It's just generally very mild compared to most things you'll see out in the marketplace. Other than last recession, that was a true exception. But having said that, we always have strategies that work in any market. We're never not investing, So I appreciate you bringing it up, and that's really the message behind the title there. So let's go ahead and hop in here. I'm going to kind of jump around a little bit, Marcin, if you don't mind, because this is such a great subject for everybody listening. This is all about raising the money. So I saw something that caught my eye. I think you called it the 5-day capital challenge. I'm kind of jumping in around here and in the middle. I know that, but that really caught my eye. If you wouldn't mind, fill us in on what is the 5-day capital challenge, and then we can get into some other meat and potatoes there,
Sure. Yeah, happy to do it. And I mean, Gary, for those of you in your audience that don't know me yet, I'm the managing partner of M1 Real Capital. I started out in private equity about 16 years ago, and I've sourced well into 9 figures in private capital. So when it comes to the capital side of the equation, that is one thing that I've spent a tremendous amount of my time on. So to answer your question, the 5-day capital challenge, when COVID hit, like everyone else, I'm at home twiddling my thumbs, can't go anywhere, you're respecting all the mandates initially and things like this. And, I'm just sitting there, and my wife's like, you got to find something to do. You are killing me. Like you got to preoccupy yourself with something. So I started mentoring friends, people that were reaching out about doing real estate deals, transactions, all the people that over the years were like, hey, how do I do this? How do I do this? How do I do this? And after a few reiterations, what ended up creating is this 5-day capital challenge to help you find 5 new investors in 5 days. So a lot of people have most people don't have a difficult time finding deals, at least their initial few deals, but they have an incredibly hard time finding the money. So the 5-day capital challenge walks people through the thought process of how to raise capital. It gives you a few contextual frameworks to work from to be able to start conversations with people, how to position yourself with potential investors. And ultimately, what we'll also talk about here today is my easy system, which gives you the ability to create urgency with your investors so that you're able to get the commitments, but at the same time, not sound like a car salesman or somebody with high pressure tactics, because capital raising is the exact opposite of what people think, quote unquote, sales is.
Right. Yeah. Well, I agree 100%, by the way. It's all about the relationship. And then the more history you build with your relationships and your performance, it gets easier and easier. And a lot of people evolve and grow into, pretty big performers. I mean, dealing with the new construction and on, high-rise buildings. And when, 5 years earlier, they were raising money for a fourplex, so amazing how far you can go with this. So let's go ahead and talk about that very subject. So is this something that anybody can do? I mean, we've got listeners of all walks of life, a lot of professionals and business owners, and some are in public service like firemen, policemen, and teachers, and others are private like dentists and engineers that own their own firms and things like that. But kind of take us through maybe like a starting point for someone who's maybe got one property, they're just getting started, and they realize, hey, if I could get more capital, I could do bigger deals. What's right? What inside their head, like, because I think you've probably been there before yourself. Yeah. What steps can you share with people?
Well, and what's interesting, Gary, is most people don't get into the business thinking that they're going to have to raise capital. They're like you, like me, you got some money to deploy. You want to buy some real estate. Maybe you partner with someone else. Maybe you do your own deal, 1, 2, 3 deals. And eventually what ends up happening is the real estate bug bites you pretty hard. And because real estate is such a capital intensive business, and eventually the banks aren't going to give you all the money you need. You need some equity, you need down payments. And what ends up happening is you get more deals than money. And I don't care if you're a firefighter with, 6, 7 figures or a business owner with 7, 8 figures to deploy. At some point, everybody is going to hit a wall and going to run out of money. Millionaires raise money, billionaires raise money. Learning how to raise capital, especially for real estate, is a tremendous skill set. So to answer your question, what typically turns people on to learning this skill set is they've had some success maybe with 1 or 2 properties, and they see something that is out of their wheelhouse personally. But if they could get 2 or 3 of their friends together and maybe throw in a couple $100,000 each or whatever the numbers are, then they can get that deal done. And then, okay, fine, you do that once or twice and it works and your portfolio has grown 2 times, 3 times, 4 times over. And then you're like, wow, okay, I went from 2 doors to 10, 2 to 20, whatever your economics are. And then you look around your circle and you've got everybody but the dog already invested. So you're like, all right, how do I go beyond that? And that's typically when I get the call, our firm gets the call, and we ended up developing an educational company out of it just to teach people the capital raising side. Now, just to clarify, fundraising is a regulated activity. So whether you're in the US, Canada, wherever it is, you got to abide by the SEC or whatever the other laws are. So you need lawyers and accountants to make sure your paperwork is in order and you're working with the right people. But aside from that, your accountant and your lawyer won't show you how to articulate your proposal in a way that makes it compelling and understandable to the everyday person. So that's the thing that I've done for the last 16 years in my world. And when COVID hit, it became something that thanks to Zoom and platforms like this, I've been able to share.
Yeah. Well, it sounds like it's really more, it's a mindset thing, it's shifting your thinking, or I really need no shifting, but having your thinking evolve and develop to be able to take on this type of role, because it's related, right? It's not the precise role of investing in software. It's not the role of finding and buying a property. It's the role of raising capital, which is an integral part. It's necessary. You It's
And,
we
and
always
the
call it.
mindset piece is so huge, like what you just said. So, for example, a lot of people, when they start looking for investors, they approach it from this subservient, almost sales type environment where it's like you're coming across to people as if you need them to do something with you because you need to get this deal done. That is entirely 180 backwards, because the way you should look at it is if you have a great deal, if you know what you're doing, you've got a good team, and you know you can execute on it, you have an opportunity that you're just trying to share with people. And that mindset is a complete 180, because you're not trying to sell something. Your mentality is, I'm doing this anyway. This is a great deal. And, I thought of you, is this something you want to look at? And this goes down to a visceral level, your mindset, your approach. You never want to have a potential investor think that you're calling them for their approval as to whether this is a good project or not. This is, hey, I'm doing this. Do you want to come? That's and it's not meant to be arrogant. It's just a mindset shift where you're providing opportunity. You're not trying to push something onto somebody.
Yeah, it's interesting. It's like the difference between selling and inviting. You're inviting them, to join you on the journey. And so what are the what would you say are the factors that help you stand out from the crowd? Like for you personally and your project, what would really are there some key things there you can talk about?
So I forget who said this, but I read a quote somewhere. It was it stuck with me for years. Dig your well before you're thirsty. And I forget who the author was. I should look it up. But ultimately, when you're looking to raise capital, don't start when you have a deal tied up, because you're on the clock. And at that point, it's a priority for you, but it's a new conversation for every single person you approach at that moment. Very seldom is it that you meet somebody on a Monday and they give you a check on a Wednesday. There's circumstances out there sometimes where that happens, but I would never rely on that, because it's just not that's not how people make decisions. It doesn't work that way. So dig your well before you're thirsty. In other words, start to build your platform socially, whether it's in your community, in your network, social media, all the above, a newsletter, a podcast, some kind of online value add platform that you have through YouTube, something. Start to share information in the context of what you're doing in a very broad and open way, where you can start having people associate you to that activity, because they need to see you doing it. They don't want to hear you talking about it. They want to see it done. They want to see you demonstrate proficiency, share your opinions. Interest rates are going up. Well, what does that mean for this? This happened in this state. Well, what does that mean for this? Start to position yourself and start to develop an opinion publicly on things. And I'm not talking about politics or what you ate for dinner last week. I'm talking about things related to, if you're in multifamily, talk about that. If you're in STRs, talk about that. Talk about the things that you're in, and start to publicly have opinions on things and add value in social sphere. Because when you do that, people start to notice, they start to correlate, Gary with X, Marcin with Y, and they start to see you as somebody who has an opinion on certain things. Well, typically people that are immersed in a subject have opinions on them. And you have to start positioning yourself as an expert. And that takes time. And unfortunately, some people don't like that, because, they want the quick hit, but raising money, you're not selling cars here. You're not selling computers. This is not a transaction. This is like you said, a relationship building activity.
Yeah. Well, so one of the first things you said was really interesting. Is build the well, dig the well before you're thirsty. And we've always had I don't know if we call it a saying, but a philosophy in our investing is, if you're looking to bring in other people and be a partner in a project, find the people first and find out what their needs and wants are, and go through the interviewing, the screening, the qualifying, make sure they're all signed up, ready to go. Money's, they have the ammunition, and they have the weapons, and they know what the target is. Then you go out and find the deals. And then it's like filling orders. It's like a doctor prescribing a remedy for something. That's what you're doing. And that way you never have to worry about, a deal falling apart, because if you got the people behind it, the deals, if it's a good deal, the deal is going to work. So I really appreciate that philosophy. So let's take it a step further. You mentioned early on, I think you call it the easy system. So now I feel like there's probably a way to do this, or strategy, and I'm guessing the easy system is a way to do that, or one way. So if you wouldn't mind, as much as you're able to share, I know some things you're probably got to be careful what we, change the names, protect the innocent, so to speak. But anything you can share on your easy, so that sounds. I like the word easy, by the way. That's ingenious. So.
Well, the acronym coming up with the acronym was not easy. I can tell you that. But the easy system is sort of the tip of the spear in terms of the format and the process that I've used for the last 16 years. And I think it sums things up really well. And easy stands for exclusive, abundant, scarce, and your allocation. So the exclusive part is in a real estate transaction, what makes that deal tremendous? What makes it exciting? What are 2 or 3 factors that just stand out in your mind? And don't talk to me about going in cap rates and coming out cap rates. Don't talk to me about, price per square foot or things like this. Like, most everyday people don't understand this terminology, but what they do understand is, hey, this building was worth X 3 months ago. I can buy it for a $300,000 discount today. This building is on the corner of X and Y, and there's 10,000 cars that drive by. This mobile home park is right across the street from the VA center, and it employs X amount of people. Whatever those factors are that the everyday person can understand, those are the things that immediately, to anybody who has some basic business acumen, says, you know what, that sounds like there's value there. And that's exactly what it is about the exclusivity about it, because you need to be able to, in 30 seconds, demonstrate to me why that is a good deal. So that's E, exclusive. Abundant is having an abundance of people to talk to. I mentioned earlier, you never want your investor to feel like you're calling them to somehow bless a transaction, because if they're not in, you're SOL. What you want to be able to demonstrate is that you have lots of people that are engaged with you at various forms of potentially working with you, either as an investor, partner, or things like this. So, for example, Gary, if I was calling you and I said, hey, there's this opportunity, boom, 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 here are the 3 things that make me really excited about it. Look, I know you told me you wanted to hear about these types of opportunities when they come up. I just wanted to let you know that I have to call another 5, 10, 20, 30 people. Tell the truth, don't lie, but make sure you have people to talk to, so that you're also putting that potential investor on notice that you see value in working with them, but there's also other people you can work with if for whatever reason this doesn't work for them. And that's good, because number one, it relieves the investor from the pressure of feeling like somehow you're waiting for them to bless this transaction. But at the same time, they acknowledge that if there's other people interested, then maybe there's something here. It's really important. So that's the abundance. Now, S, for scarcity, there's 2 ways to create scarcity in real estate. One is the time itself. In other words, the property is closing on the 30th, the 15th, whatever day. That is a date that creates a limitation, because after that date, it's done. So that's one form of scarcity. Actually, a mistake that a lot of people make is when they talk to their investors, they tell them the fund closing date is the same date as the actual property closing date, which is a big problem, because when an investor hears, oh, we're closing the property on the 30th, they think, oh, okay, so I can send a check on the 29th. Well, you don't want to do it that way, because if they don't send the check, what do you do next? So obviously a big mistake people make is they don't give themselves enough time. But that's one form of scarcity. The other form is the actual capital allocation itself. So if you need $1 million, once you have your $1 million, you're done. You need 3 million, 300,000, whatever it is. So again, that's the scarcity component. There's a polite and professional way to share that with somebody. And then, you'll probably have a discussion further down the path. They'll ask you some questions. Maybe they'll want to know some more about the building or the state of the roof, whatever questions they're going to pepper you with. Towards the end, you can make a comment like, look, so Gary, it sounds like this is something that might be a fit for you. Obviously, you still got to do your research. I'm going to send you the full due diligence package on this. But if everything did check out, what allocation would you potentially consider? Now, someone who's interested will tell you, well, if everything checks out and my lawyer reviews it or whatever the process is, I'd probably look at X or Y. Great. That in the industry is a soft commit. Now, if somebody's not interested or they have a legitimate reason to tell you no, they'll say, well, look, it sounds interesting, but actually I don't have any money right now, or I'm saving up for a cottage, or, I don't really like it's all good. The point is, at least you know where they stand. There's nothing wrong with getting a no. I'd rather get a no than a maybe 100-1, because at least I know where the person stands. But if they say, yeah, you know what, if everything checks out, I'd probably do X or Y, you can say, great. So today's Tuesday, I'll send you the package. Why don't we circle back on Thursday, Friday, see if you have any questions, and let's make sure the timelines make sense. And again, there's no pressure. There's no, it's okay to say no. That's a really big part of what I teach and what I do in my business. If you're not interested, just let me know that, because like I said, there's a lot, like this is a great deal. There's a lot of people to talk to. Here are my deadlines. So I just want to know if this might make sense for you. And again, there's no pressure to it. That's the best part. If that person, for whatever reason, can't engage at that moment, it's okay. It's great. We can still go golfing next week. Our kids play hockey together, whatever it is. It's all good. It's not a problem.
We'll be right back with the Massive Passive Cash Flow podcast after I invite you to Monday Night Live. Every Monday night, 7 p.m. Eastern, I teach a class without fail for you on subjects ranging from flipping to buying rentals, managing rentals, wholesaling, commercial, creative purchasing techniques, analyzing properties, identifying properties, hundreds and hundreds and hundreds of subjects. And if you are a licensee, if you have a real estate license, you should definitely tap in, because there are a lot of investor agents also in the class. Many of them are on the global investor agent team. So you can learn from them, as well as from me, how to actually work with investors correctly and profitably. All right, we'll see you Monday night. The link is in the show notes. Go ahead and register. We'll get right to the Massive Passive Cash Flow podcast. Yeah. Well, I love the approach there. And one thing I was thinking of as you were speaking, in my business career, I came from banking, then I was investing all along while I was in banking, did mergers and acquisitions, and met some pretty key figures, and then ended up going out on my own. I retired early at 40 years old, and then built a brokerage and to serve investors, and we started attracting people from Wall Street. But a lot of it was just, we really didn't have a plan. But is there, these folks were clearly high net worth individuals, but is there a process, are there steps somebody can follow? Like if you really want to focus on, cardiosurgeons and neurosurgeons who are typically high wage earners and hopefully high net worth individuals too. But was there anything special you would do for them, instead of just attracting the mainstream society, the people who really, like, they want to invest, they just don't have the time to be going out looking at properties. They would rather be behind the scenes providing that muscle power. Is there a way to approach those guys specifically, or how do you make your project look really good for those high net worth folks,
Well, I guess a really good question, and this is more of a generic answer, but a really good question that I typically ask people is, I say, do you want to be invested in real estate, or do you want to be a real estate investor? And a lot of people say, well, what do you mean? I go, well, if you want to be invested in real estate, it's your job to know where you're investing and understand that the people involved are great and they have a track record and things like this. If you want to be a real estate investor, you are that person that's finding the deal, signing the mortgage, managing the managers or the property managers. You are the asset manager typically, and it's your job to make sure that you're steering the ship in the right direction. And to your point, Gary, a lot of people, because I've got tons of friends that are doctors, dentists, all kinds of business owners, smart, brilliant people, but the one thing they don't have is time. They do not have the actual time to do this stuff. Conceptually, they're right there with me. When I walk them through a deal, we're doing DD, they're asking me good questions. They're smart. They could do it. But if they make $500 or $1,500 an hour running their business or whatever they're making per week versus diverting their attention from that and now buying an apartment building, is that going to be the same return? And the answer is no. So I guess for those people in your audience that are, from, for example, you're a dentist and you retired and you started investing in multifamily, and you've got some of your fellow dentists paying attention, saying, "Hey, what's John doing? What's Gary doing? What's Jimmy up to nowadays?" That kind of thing. Then I think the transition conversation that has to happen is, first, you need to get clear on what your personal niche is. So in other words, how do you present yourself? So are you retired? Okay, so you're 45 years, I'm just making stuff up. So you're a 45-year-old gentleman, you've retired from dentistry because you managed to buy a few buildings, and now you're focused on adding additional buildings because of X, Y, Z. So, okay, great. That's a good starting point. Now, how do you make that relatable to other dentists? So it could be, again, through some kind of you have to create some kind of a medium for yourself. It could be, I've seen doctors and dentists come out with, books, ebooks, podcasts. They've come out with newsletters that they share within their peer group. And those peers see them as credible because they were like them 5, 10, 20 years ago. So the best thing you could do is, if you've transitioned from a profession to now being a real estate investor, is really quantifying that niche, and your personal story needs to be clear in a way where another dentist or another mechanic or another plumber or doctor or whoever it is can look at you and go, "Oh, I knew Bob when he was doing so-and-so. He's doing this real estate thing. That makes sense." And then you got to make it easy for them to understand your story. That's because you have the trust. They just need to know how they plug into it now.
Right. That's a good point. It's being able to articulate a concept or a principle, or in this case, particularly a project, in a way that's easily consumable and digestible. That's critical, because confusion often can lead to doubt. Doubt can often lead to I'm just not feeling comfortable. I'm going to say I'm going to pass on this one. And so that I really appreciate that. You're right. They're generally very busy, and often they have gatekeepers. Sometimes their gatekeepers are their spouses. My oldest brother-in-law is a kind of a famous surgeon, and my own sister, she's a gatekeeper even with us. So
right.
You got to have a good, clear message. So speaking of some of those challenges, I'm pretty sure, just like in any walk of life, there's always the good, the bad, and the ugly. When I write, I've written 7 books, and I try to be really realistic about it and say, look, guys, yes, you can make a lot of money doing this, but you're dealing with other people, and they have their own agendas too. And sometimes there's things that go sideways, or you got to give up things and compromise. But what are maybe some of the key challenges you found, or some the good, the bad, and the ugly? I guess we'll just call it that.
Well, in the context of capital raising, I think a challenge I'll give you a self created challenge, and I'll give you an existential one. So an internal challenge that a lot of people have is they're not clear on where they're going as a business. So it's impossible to build momentum and raise capital if, one day you're looking at a mobile home park, the next day you want to buy a golf course, a week after your buddy sends you a commercial plaza and you're excited about that. Now, if you jump from asset class to asset class, that shows it. Unless you're already running, hundreds of millions of dollars of AUM, where you have a really strong core and foundation and systems and people and processes. But if you're just building and you're just jumping to the grass is greener on this deal versus this deal, this market versus this market, that creates a tremendous amount of headwinds for you to be able to raise money. Because it's hard to prove that you're credible if 1 week you're really excited about this golf course and 2 months later you're pumped about this industrial park. They might both be great deals, but the challenge is anybody with real money knows that you're just swinging at the fences because you don't have a focus. You worked in M&A. You don't go and build companies in tech and then go build something in a grocery business. You don't then go work in food. You don't then go to the gym industry. You typically have your 1-2 step and you scale. And because there's so many intricacies that are different between multifamily versus industrial versus short-term rental versus mobile home parks, whatever it is. I have people throw me stuff all the time and I go, that looks great, but I'm a multifam guy. Do I do development? If I have extra dirt and I can bring in a builder as I'm executing my plan on the rest of the dirt, and this dirt was basically free, sure, I'll look at it. But I'm not going to go out and buy stuff to be a builder because I'm not a builder. That's just not my world. I stay in my lane. So the biggest challenge that people create for themselves, this is my point, is that they don't have a focus. They don't have a clear focus. Yeah. So it's impossible for them to build momentum if they jump from asset to asset. The other clear challenge that people have when they want to raise money is they're not firm on what their proposal is to the investor. So they end up getting investors that want to negotiate every transaction as if it's a new transaction. I can assure you that, first of all, if you do one deal a year, 2 deals a year, you can accommodate individual investor needs and figure stuff out and put it together. But if you're trying to scale and raise millions of dollars to build a portfolio, hundreds of doors, thousands of doors, whatever it is. Could you imagine if you went back to every investor that wanted to throw in $100,000 and $200,000 and say, hey, so they want to, you go back to your lawyer and hey, they want to adjust clause 3C and 2.9 and blah, blah, blah. You couldn't do it. So that's an existential one that new people that are newer to the fundraising business have a hard time overcoming because they feel like the investor is going to drive the bus. And look, if you want to be receptive to some feedback, comments in the agreements, that's fine. But once it's done, and you're out. Once you're out the gate, you're out the, I mean, that's your M&A world, right? Once you're out the gate, you're out the gate. Yeah. I mean, unless someone's going to stroke you a check for the entire project, and just close out the raise, then you got to be able to push back and say, I appreciate what you're saying. We did it this way because of X, Y, Z. Here's why we think it's a great deal. Here's how we address your concerns in other sections of the agreement. Does that work? And that's important as well. Yeah,
well, I appreciate that. Yeah, I tell you what, I know we're probably getting close on time here, but what's it's kind of a wrap up segment. What would you say are some of the key lessons you learned? Learn anything you can share, parting words, key lessons you learned in the process. And then and before we go, make sure we remember some people just simply don't want to be raising the money. They want to partner with people that already do. And maybe you've had projects you'd like to entertain if you want to bring on some additional investors. I'm sure you'll have some takers from this podcast, So
I appreciate that. Yeah. Well, I think one of the best lessons that I could probably give contextually is we are very hard on ourselves when things don't work, but when things work, we just overlook them and move beyond it. So for me, I remember in my 20s and my 30s, it was like any successes I had, raise an 8-figure fund, go buy apartment buildings, I was like, okay, cool. So it's done. So when I do this now, I'll be happy. And then you go do that next thing, and then you totally disregard it and you move beyond it, and it creates this environment where you're never satisfied because you never acknowledged a little win. So just practically, I assume you probably have business owners, entrepreneurs that listen to your podcast that, are always pushing type A, and that's great. But at some point, just take a minute, acknowledge where you got, because whether you're running your dental practice or your business or whatever, where you bought that next property, just take a minute, because that acknowledgement is huge. As far as the capital side, it's interesting. And talking to you, Gary, is great, because if you come from that M&A world, you understand capital markets as its own world. Money is a commodity of sorts, right? It comes as its own. It comes with its own terms and conditions, and it's agnostic. It's just looking for a return. And people that don't understand that world think that money is just something that will show up if you have a great deal. Well, if that was true, there would be no investment bankers, there would be no M&A, there would be no private equity firms. Money would just naturally find the best deals. The truth is, the best deals aren't the ones that get funded. The best communicated and the best packaged deals are the ones that get funded, whether it's sold on Main Street, Wall Street, or M&A, whatever it is. It's your ability to articulate where you're going with the business that will get it sold.
Yeah. Well, it's interesting you brought that up, because prior to being in banking, I was basically, I worked for NASA. That was my first job. And then
oh, cool.
And I guess I could say publicly, I worked for the U.S. Navy as a contractor tracking Soviet subs. I can't tell you any more than that.
No kidding.
Yeah, it was a top secret security clearance, the whole 9 yards. And then I just wanted to be in a people business, so I got into banking, and that's when I realized how money really works. And so what's interesting, fast forward now all these years, all that's coming up now about cryptocurrency and people talking about digital currency, I think it's helping the general consumer, everyday consumer, realize that money actually is a commodity. It's not like people don't think about that way, that you can buy it and sell it and trade it and invest in it. It's just, it's just something you use to buy groceries and pay bills, and hopefully invest in a 401k. But it's actually, like you said, it's a commodity, So interesting way to wrap this up. And for everybody listening, pay attention. So Marcin, how can people find out more, website, chapter in a book, anything like that don't mind sharing,
Yeah, of course. Well, I've got my real estate company, M1 Real Capital. So it's m1realcapital.com. If people want to learn about the multifamily apartments that we're buying, buildings throughout the South, Southeast, we typically buy tired, older buildings for a fraction of the replacement cost and renovate them, clean them up, and, re-rent them and refinance them. So now with inflation kind of raging away, that model is incredibly lucrative because you can't build stuff for what we're buying it for. So that's working out well.
Right.
On the educational side, if people want to learn about the easy system, I've got a free mini course on my personal website, marcindrozdz.com, marcindrozdz.com. And they can download the free mini course on the easy system. And, we have trainings, like you mentioned, we have 5-day capital challenges, things like this throughout the course of the year. And we once or twice a year, we do something called the boots on the ground, where all our students fly in from all over North America. We rent a bunch of vans and we go look at real properties, multifamily complexes, and teach people about things to look for. So,
okay. Well, I might actually take you up on that when next time I'm back in Inglewood. I can, because I'm only an hour and a half from you. So
that's right.
I'd love.
Yeah, last one we did was in Orlando.
Cool. Yeah, it's quick, easy 2.5 hour drive, depending on traffic, and so everybody, please remember this. It's MarcinDrozdz.com, marcindrozdz.com. And then m1realcapital.com. So take advantage of that. And he's in a great area too, by the way, for everybody listening. So Florida's been red hot, and I don't see it slowing down anytime soon, quite frankly. So,
no.
Yeah. And by the way, we appreciate you listening to this. And if you could do us a really huge favor, the currency of podcasts is your reviews. So this has been an exceptionally good one. If you wouldn't mind, leave a review for Marcin, whether it's iTunes, iHeartRadio, wherever you are, leave that review. We certainly do appreciate it. What makes the world go around. And again, while you're out there, check out the website, globalinvestoragent.com. You'll see probably well over 100 agents out there all over the U.S. and actually 1 or 2 in Canada. And grab yourself one of those folks because it's free, and they will do the heavy lifting for you too on your individual purchases. But for everybody listening, thanks again for participating. We will see you next week. Marcin, thank you again, and God bless all of you and your families, and stay safe.
Thank you. Thanks for having me.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.